Welcome to No More, Risk Better, a CreditSights podcast. Across the global strategy team, we aim to make sense of the macro and the micro, highlighting opportunities and the risks facing the fixed income markets.
As the macro makes headlines, we leverage our network of experts across Fitch Solutions to better understand economic trends, rates gyrations, geopolitical events, and how these factors impact corporates.
At CreditSights, we understand that credit investing comes down to picking winners to generate alpha and avoiding losers. Our team of over 100 analysts across the US, Europe, and Asia provide unmatched sector expertise and fundamental knowledge.
In our weekly podcast, the strategy team offers a look at the conversations we have with our colleagues, including analysts, fellow strategists, economists, and leveraged finance market experts. If you want to know more so that you can risk better, you'll want to give this podcast a listen.
Welcome back, everyone, to the CreditSights No More Risk Better podcast. My name is Logan Miller. I'm the head of European strategy based in our London office. And today I'm pleased to be joined by my colleague, Mihir Trivedi, who is our senior analyst covering the European transportation sector. We had intended to discuss much more of sort of a relative value view and outlook for the sector, but obviously with things changing quite rapidly with the situation in the Middle East, we figured we would focus particularly on that. So Mihir, welcome to the podcast.
Thanks for having me on, Logan. Looking forward to talking all things aviation today.
Yeah, so definitely glad to have you here. I think it's very timely with what's going on. Over the weekend, we obviously saw kind of a joint military effort by the U.S. and Israel to basically wipe out defense capabilities and even leadership in Iran. Is having very much, broader macro implications on the market. We've seen, I think a modest pullback in risk appetite on Monday to start the week. Today seem things to be unraveling a little bit more disorderly. So I'm curious, Mihir, we were hearing a lot of headlines that this is perhaps could be sort of the biggest shock to the global aviation market since COVID. Put this into context for us. What is really kind of happening right now?
Yeah, so I'd start by saying it's very significant, right, within the broader aviation sector. And I'd go as far as saying that not even the Russia-Ukraine conflict caused this scale of shutdown across the global aviation network. So if we go back a few days now, within hours of the first reported strike, there were 8 Middle Eastern countries that effectively shut their airspace. We then in the news heard stories about one of the largest global passenger airports in Dubai International, having been hit in an attack, which ultimately saw the immediate closure of the airport. And that news was followed by similar stories in Abu Dhabi and Kuwait, which were struck during Iran's retaliation attacks. This has now led to several different airports across the region either having been shut down entirely for a few days or seeing significant disruption across the region. And I'd start by saying this is a lot more important than people may think, as it effectively puts a big void across a region that functions as one of the world's most essential aviation corridors. This has led to thousands of different flights being cancelled over the weekend and into this week, and substantially more having either been delayed or significantly rerouted. We're currently, it's the airlines, it's consumers, it's the sector overall. We're currently in a bit of a wait and see at the moment to see how the situation develops from here, and continuing to monitor the situation.
Yeah, no doubt. I mean, I think there's a lot of sort of, obviously the headlines are just, there's so many, and obviously the situation is changing quite rapidly. And it's starting to impact much more of sort of the global, economy from a potential downside perspective. But I guess, Mihir, help us kind of understand, why does closing Middle Eastern airspace cause such a global disruption? And, how does that sort of tie into, the European, sectors?
Yeah. So I guess the short way of answering that is the Middle East is effectively the main highway. So that connects air traffic between North America and Europe, connecting it straight to Asia. You have the likes of Dubai, Doha, Abu Dhabi, and the corresponding Gulf carriers, so the likes of Qatar Airways and Emirates, which together move tens of million passengers a month across the region. So it's very important in linking Europe to parts of Asia. So whether it be Southeast Asia or the Far East, but it also acts as a very significant hub for those who have onward journeys to even as far as Australia. So when these hubs close or traffic within the region is significantly restricted, Europe to Asia loses its most effective and most efficient flight path. This then means that long-haul carriers then must significantly reroute and detour their flights, adding significant hours to each flight, and in doing so adds significant costs as well, which ultimately is then passed on to consumers like you and I. It's actually interesting right now because if you have a look at any real-time flight tracking websites, there's a visible hole at the moment when you can literally see a blank pocket over the Middle Eastern airspace.
Wow.
Where traffic is almost non-existent. And this is actually very interesting because, it's normally such a busy part of the world map when it comes to aviation.
Yeah, I know. It's quite something. I mean, everyone's obviously focused on right now the Strait of Hormuz in terms of, supply chain disruptions and obviously, tankers being kind of cut off from really kind of entering and exiting the region, just given the conflict, but it's clearly having broader impacts on the aviation space as well, which is so crucial to sort of infrastructure, like you mentioned. But let's kind of talk about like the airlines now. I guess what have they actually done in response to this, at least in terms of the names that you're covering?
Yeah, so in a broader sense, I'd say the airlines have kind of gone into what's known as response mode. The Gulf carriers, as expected, almost immediately halted their operations within the past days. But the impact wasn't just felt there, right? So you had some of the European legacy carriers, which I cover, the likes of British Airways, part of the IAG group, Lufthansa, KLM, and Air France. They've cancelled a significant number of flights to the Middle East, and more specifically on very popular and profitable routes. So to the likes of Tel Aviv, Beirut, Bahrain, and of course Dubai, which has led to significant disruption. And I'd say that this impact isn't just on the big legacy carriers. You've also had some quote unquote low cost carriers, the likes of Wizz Air, which have halted operations to the likes of Oman, Dubai, and Israel for at least a week. So this disruption is causing kind of it has far-reaching impacts across the sector at the moment. Not only is it impacting the direct flights, but as I mentioned, you have a significant number of flights now having to reroute their operations. So now you're having flights rerouting over Saudi Arabian airspace. You have some that are going as far as flying over Egypt in order to get around the closed airspace. You're having several long-haul flights now having to stop for extra refueling, again, all adding to the ultimate cost base. And overall, this disruption is causing anything from an extra 1 hour in flight times to anything up to even 3 hours of additional flight times, which obviously not only comes at an inconvenience for consumers and travelers, but also as a massive cost for some of the airlines. So at the moment, I guess the airlines are continuing to liaise with local aviation authorities to understand, A, when it's safe to continue traveling, and also when it's feasible to think about restarting operations. But until then, we're expecting a lot of these aircraft to remain grounded for the foreseeable future.
Interesting. Yeah, it does feel like, at least the rhetoric from the U.S. side seems to be, expecting this to sort of go on for some time now. At least for a number of weeks, and the longer these sort of travel issues go on, the more it's going to cost the airlines potentially. But I think so beyond kind of the operational nightmare, this, like I mentioned, this probably comes at an additional cost, right? I mean, how are you thinking about the impact on airline finances, and given sort of the impact on the Gulf, how should we be thinking about sort of jet fuel prices in the sector?
Yeah, so it's interesting because jet fuel is an airline's single biggest cost line item, right? So any impact on jet fuel prices will invariably have an impact on profitability and margins in I guess, some capacity. Where I'd say there's a little bit of nuance is in the fact that a lot of these larger legacy carriers in particular have pretty large hedging positions coming into 2026, right? So that means that for some months, a lot of these impacts are yet to fully, truly be felt within the sector.
Yeah.
But again, I nuance this by saying that it's restricted to those who have these significant hedging positions. There are some airlines out there that we've looked into which, are a little bit more sensitive to these increases, and maybe are monitoring this a lot more closely. I guess it ultimately comes down to this. And having had a look at some of these hedging positions, you have a lot of the low cost airlines, I think they're likely to be quite heavily hit because they don't hedge as significant a position as some of the bigger carriers. But then you also have some of the bigger carriers, the likes of Air France, KLM, who just aren't as adequately hedged as some of the other players. I guess the other question to think about is how long fuel prices are set to be elevated for. So if it's a relatively short-term spike, we could see some clear winners and losers depending on these hedging positions. But then if this increase is more prolonged, we could see maybe a larger prolonged effect, and it could act as a significant cost-sided drag on the sector, not just for maybe even 2026, but even beyond that. So that's the kind of jet fuel aspect of the increased costs. But then, as I mentioned, you have this increased cost of flying around the Middle Eastern airspace, which adds that extra time to these flights. But it's making each flight less and less profitable to fly at the moment. So airlines, they were operating at pretty low margins to begin with. Having this impact, it's effectively hitting them right there. And of course, you've now got to pay increased staffing costs, increased aircraft grounding fees. It's all adding to the ultimate cost base. And it's one that, it's going to impact credit metrics for some time. What we will say, though, is that this is a perfect time for those airlines who are further along their fleet renewal programs. So those who have, I guess, the more fuel-efficient aircraft, they're, I guess, going to be one of the clear winners in the sector at the moment. They're probably not going to be feeling these impacts from the increased fuel costs as much as those who operate less fuel-efficient aircraft.
Which I imagine are probably some of the lower cost airlines, right? And in terms of, flight, sort of efficiency of the planes that they have in their...
Well, it's actually interesting because a lot of these low cost airlines, they bank on having new aircraft to try and save on jet fuel costs. Okay. So they could actually be some of the winners in this instance, at least for the next few months. But it's interesting. So
yeah, a little bit counterintuitive, I guess.
Exactly.
Well, I was kind of thinking about it. So then let's talk about what passenger thinking. How do you think passengers react to this? I mean, obviously a large share of passengers across kind of the Middle East is probably business oriented. Do you expect travel demand to really kind of fall off a cliff in a situation like this, or is it kind of dependent on whether or not it escalates really from here?
Exactly that, right? So the way I'd look at something like this is look at the short-term immediate impacts, and then you'd kind of look at the longer-term impacts of a situation like this, right? So the short-term impacts are kind of pretty much playing out the way we would expect. You have certain airports being shut and a certain number of flights being cancelled. You have certain aircraft being now rerouted to nearby areas to try and bring a lot of these passengers or travelers who are stranded back home. And we're now, in the short term at least, expecting a significant number of people avoiding the Middle East altogether. Now, whether that be for their primary holiday destinations or whether that be for a layover for an onward journey, we're expecting them to kind of shift their travel plans to other parts of the world. As you said, business travel is immediately going to be impacted. A lot of companies are likely to defer business trips for quite some time. And overall, the passenger numbers in the near term are likely to remain relatively weak for the next few weeks. The medium-term impacts, however, are a little bit more interesting, I would say. We expect there to be significant airfare increases from what's happening.
Mm-hmm.
You know, this is set to last several different months, several months from here. But it's actually quite interesting because air travel demand is quite unique in that respect, right? So I consider it to be relatively inelastic.
Okay.
Right? So as prices go up, you'd expect consumers to kind of cut back their travels, but this doesn't ultimately happen, and particularly since COVID, right? So ever since we've been through COVID, any kind of consumer spending report you tend to read, air travel is the last place people will make cuts. So as a consumer, they are way more likely to make cuts to eating out and retail and kind of casual spending. People want to make sure they go on their X number of holidays a year, right?
Yeah.
So it's relatively inelastic in that respect.
Okay.
And that's kind of one of the reasons why we see that rather there being a significant decrease in demand, we see a lot of that capacity kind of being shifted right to other parts of the world. So as a result of this, we could see transatlantic demand, for instance, increasing in the process. So you know, that route could be a clear winner of something like this.
Okay.
And then longer term, we kind of see some maybe more structural impacts of what's going on at the moment. So rather than people considering layovers, you know, we may see an increase in the number of direct flights. So ultra long haul travel, for instance. So it's still very early. We expect, you know, the true impacts of this to be felt over the maybe next 4 to 8 months. And, you know, that's when we will fully see it being reflected in the overall passenger numbers. But I guess overall in 2026 now, we're expecting reduced profitability, weak passenger numbers, higher airfares, and significantly reduced load factors, at least for the coming weeks.
Wow. 4 to 8 months. I mean, that seems like considerable extended timeline for something that's happened so quickly, which I think is why the markets are so confused and trying to figure out, you know, where sort of the you know, the dominoes fall per se. I guess, Mihir, is this like, you think airlines are sort of in panic mode, or you know, what do we expect next?
So it's such a fluid situation at the moment. I guess you kind of just have to take it day by day for now. What we do know at the moment is that there is a certain number of routes and certain number of aircraft that are going to be grounded for at least a week. That is what some of these airlines have communicated to the market. You know, anything you read in terms of the broader market, you have to assume that this could be a lot more prolonged than that. So, you know, you've heard stories about this conflict lasting for up to 4 weeks. So, you know, we just have to assume that there's going to be a few more cancellations within the market. There's going to be tons more uncertainty, and people are ultimately going to be delaying their travel plans for this year, which will ultimately lead to a much smaller booking window throughout the year. And, you know, it's such a fluid situation, as I said, that it's one we've just got to kind of continue to monitor on a day by day.
All right. So, you know, a lot of different kind of scenarios and, you know, perhaps outcomes here. You published your full year kind of 2026 outlook recently, I guess just a few weeks ago, right? So is it too early to look at sort of a revised outlook for the coming year?
So it's it's very interesting. So we came into this year, we weren't expecting, you know, the double-digit growth in passenger numbers that we were seeing a couple of years ago. And one of the reasons for this is that, you know, passenger numbers since the pandemic have, of course, normalized. We were expecting, however, kind of the low single-digit increases in growth rates. And ironically, a lot of this growth was set to be led by maybe, say, Asia and the Middle East, two regions which are going to be massively impacted with what's happening at the moment. So depending on how long this situation, the kind of conflict persists, we could kind of see a downward revision to these forecasts. We could kind of go to it being maybe, say, flat year on year. And maybe in some scenarios, we can see it kind of turning negative, depending on how long it lasts. It's, I guess, only when passenger data is released for February and March, we'll kind of know the true impacts of what's happening. And then we can kind of reassess the models.
Okay. So definitely some concerns, obviously, but not quite the doomsday scenario yet for
Absolutely.
the space.
Okay. Yeah.
I guess other than sort of the Middle East conflict, we sort of had discussed doing this podcast before it all went down over the past weekend. But let's talk a little bit more. What are some of the other more limiting pressures on growth in Europe this year? Besides what we're seeing right now in the Middle East.
Sure. So I guess there's two things I want to discuss today. One being airports and the other being airlines.
Yeah.
And I guess we can start with the airports. So following that post-pandemic rebound in travel, the absence of growth in more recent years on the airport side has a lot to do with capacity constraints, more so than there being demand-sided pressures. From a regulatory perspective, a lot of the airports are kind of capped in terms of how many aircraft can kind of take off and depart, or land rather, in terms of through their airport across a given year and how many passengers they are able to fly. Heathrow is a kind of prime example of this. It's one of the most heavily regulated airports in Europe and is effectively capped at an annual flight cap of 480,000. And to give you a little bit of context to this, it operated at 99% of this cap last year. So there is very little scope to increase the number of aircrafts it can service. So growth in the coming years was obviously only going to be limited to A, efficiency gains, and B, increasing the sizes of the aircraft that it kind of serviced. And this is why not just Heathrow, but a lot of the UK airports, as well as the wider European market, have kind of had their eyes on expansion plans, whether that be short-term, small efficiency gains, medium-term capacity, terminal improvements, or even maybe, say, the third runway plans at Heathrow. Everything in the sector is kind of pointing towards adding additional capacity on the airport front to try and service this level of expected high demand in years to come. But I guess it's not as simple as that, because you're going to have to balance that increase in capacity and the economic benefits with, I guess, the environmental angle of doing so as well. It's obviously aviation is not very environmentally friendly. There's kind of been a push to try and introduce more greener methods in terms of aviation. But if you have a look at even, say, Schiphol at the moment, they've introduced caps, not because they don't have the infrastructure to fly more passengers, but because they're trying to combat pollution to a certain extent as well. So I guess the cap on the airport side is more to do with supply side constraints rather than there not being the level of demand. So that's airports. And then airlines, European airlines have faced more cost-sided pressures than demand-sided ones. And this is why we are seeing rising air tickets in the last 12 months. In recent months, a lot of these airlines have kind of been squeezed through higher regulatory and ATC costs, the costs of adding this greener, more sustainable aviation fuels. Labor and maintenance costs have gone up, and ultimately a lot of this is squeezing the yields that they are generating per passenger at the moment. So that's on the cost side. But then there've also been kind of some supply side bottlenecks as well, from a lot of these aircraft manufacturers delaying the delivery of some of these aircraft to these airlines. And that's actually capped a lot of this supply capacity growth in recent years. Airlines such as Lufthansa, for instance, have been hit the hardest because it's not been able to transform its fleet to the more modern, efficient ones as quickly as the others have been able to. And this has basically prevented airlines from adding capacity to match the level of increasing demand. And it's made it harder and harder to kind of sustain load factors and passenger numbers in the current market.
Wow. A lot going on. I think you did a really good job threading, the current events with sort of the landscape that's been in play, or sort of your outlook. Complicated situation, very much evolving on almost a day by day or hour by hour basis now. I always like to end with sort of like a discussion around just picks and pans. Obviously, we're research analysts. So I guess in light of the current situation, how are you thinking about names that investors should be putting money to work? or perhaps on the flip side, some names that you would potentially avoid given the current situation?
Yeah, sure. So I cover the 3 UK airports at present, and we recently switched to an underperform on Heathrow in that outlook piece, which recently went out. And it's actually quite timely that because two of its main routes are actually to Dubai and Doha. So, it's one of the names which we see as being relatively more impacted given the current situation compared to some of the other more regional ones. But even aside from what's going on in the current market, we saw there being very little scope for any outperformance at Heathrow this year, given that firstly, we had the capacity constraints I mentioned in terms of its overall flight cap. There's also constraints from the Civil Aviation Authority in what it is allowed to charge per passenger. So that was always going to be another constraining factor. And we're expecting, credit metrics to be hit pretty hard again this year because it's set to invest a significant chunk into CapEx. So there was always that pressure on leverage for the year.
Okay.
Finally, it's an airport that's kind of contending with regulatory uncertainty as well. So we've kind of been speaking to clients and telling them to maybe look elsewhere across the UK. A name that we really like in sterling is Gatwick. Gatwick, it's relatively more shielded compared in light of what's going on at the moment in the broader market. It has significantly higher exposure to kind of short haul travel and low cost carriers, which are likely to be relatively unaffected in terms of what's going on. And in terms of regulatory uncertainty, it just doesn't deal with the same level of risk that Heathrow does. So that's in sterling. In euros, we like Manchester Airport Group. We think it's a little bit more of an attractive entry point because in sterling it trades very tight.
Okay.
So for those euro investors, we think it's an attractive opportunity to look at MAG in euros.
Well, on the airline side.
Yeah. So on the airline side, our recommendations haven't actually changed given the current situation.
Okay.
The overall direct exposure to the legacy carriers is likely to be relatively soft. You have low single digit exposure to the Middle East. When you start baking in the numbers for Asia, you're starting to look at around 10% of direct revenues set to be impacted. Overall, we see the most value in IAG, so the parent company of British Airways. It's an attractive opportunity to kind of trade up given the current environment. We see having a degree of balance sheet strength at the moment is in being quite key. Strong liquidity, stronger margins. I think that is where we would kind of put our money at the moment. We also like the fact that it's a lot more kind of advanced in terms of its fleet transformation programs as well. So, we think there's a lot of value currently in IAG compared to maybe the likes of Lufthansa and Air France KLM. So, we like going up in credit quality at the moment.
That makes sense. And I think that also fits in nicely with the way that we've been thinking about European markets from a strategy perspective. Coming into this year, we have been telling investors that they should be moving up in quality. We thought that from a sort of a relative value perspective, you're just not getting paid to really move, down in quality. So being in companies with really kind of defensive, sound balance sheets is what we've been telling clients for, since the beginning of this year. And so we're starting to see that. I think really that trade sort of play out nicely in terms of our favor. But I think you really did a good job covering the whole, perspective here on both airports and airlines. Obviously a lot to consider and is in a very fluid situation that you mentioned, but thanks so much for coming on.
Thanks for having me on.
We may have to do another one in the short term, in case things, change quite materially from here. Otherwise, for those listening, if you do have questions for Mihir, or if you have general strategy questions about European markets, please feel free to, obviously reach out to us via the Ask an Analyst function on the CreditSights website. You can reach us on Bloomberg. I also do want to point out for those listening that we're doing a strategy webinar on the 5th of March. So that's this coming Thursday, 3 p.m. UK time, 10 a.m. New York time. And that'll be a good sort of listen in terms of the what we're seeing in terms of the macro and sort of trying to analyze the situation in Iran. So if you have interest in that, please either see our website or reach out to your salesperson and we can get that link sent over to you to register for the webinar. Other than that, please, everyone, and good luck with the recent news. Again, feel free to reach out to us if you have any questions.
CreditSights disclaimer. All price references correspond to the date of this recording. This podcast should not be copied, distributed, or reproduced in whole or in part. Neither CreditSights nor its affiliates makes any representation or warranty as to the accuracy or completeness of any information contained in this podcast. CreditSights is not providing investment, legal, accounting, or tax advice, is not providing research or making any recommendations, nor is CreditSights offering or soliciting any transaction with respect to the purchase or sale of any security. The receipt by this listener of this podcast is not the giving of advice by CreditSights or its affiliates.